2023 was a crazy year in real estate. And I want to share with you per month what happened with interest rates and how that also impacted the US National Price Index. So as we started the year, January 2023, interest rates were well off into the sixes with a national average of about 6.45%, which felt like a lot because we had just exited a time where interest rates were half that. At that same month in January, the national price index in the US was 292,000. Now in February, we got a little bit of a break and interest rates dipped down a little bit to 6.19%. We all felt relief and we thought that the fight with inflation was over and that here comes the cheap money all over again. That didn't happen. Things changed, and then the national price index in February was 293,000, so it rose from the prior month. Now in March, we got electrocuted with a shocking new rate of over 7%, with the national average of March of 7.1%, which truthfully is not a crazy rate. That's kind of a normal market rate between 5, 6, 7% is rather normal. But it was a big shock because we had experienced 2, 3, and 4% interest rates in the prior couple of years. So in effect, the trend continues. So in March, the national average price index in the US rose to 297,000. So it jumped up quite a bit. Now here comes April. And again, I feel like real estate has a sense of humor because we went from 7.1 national average to April 6.37%. So we got another sigh of relief with interest rates coming back down, but the home value index did not follow. That did not come down. It actually rose further to 301,000 in the month of April. May comes along, everybody's celebrating Cinco de Mayo, drinking margaritas, and interest rates bounced back up to almost 7%. So May brought an average of 6.73% and a median price of 305. So the trend continues on two ways, right? The trend with interest rates is it's just doing this up and down, but the trend with the home price index is just gradually keeping on the rise. So that didn't see anything come back down. Now in June, real estate again played with our emotions, and so did interest rates, with the average rate of 6.85% in the month of June, and the national price index reaching 308,000. Now, before I go on to the other months, I do want to clarify that when we're talking about these average interest rates, we're talking people with good credit. So and what I mean by good credit is 740 and above. That's what gave you these rates. So if the rate, for example, in June was 6.85 average, that's someone with a good credit score, meaning that if someone had a lower credit score, maybe like a 630, 640, they were well off into the mid sevens. So I just wanted to make that side note. Now, 4th of July comes, we're here to celebrate, and we climb back up over 7%. And after July, actually, that was the last time that interest rates were below 6. So 7.22% was the average rate in the month of July, which again, the trend continued with the price index reaching 310,000. August comes, which is generally June, July, August. Part of the September is usually the best time to buy and sell real estate because that's where you see the most activity. Well, this year we went into the hottest time for sales with the highest rates that have been seen in a long time. So that had an impact on how many homes sold. July giving us a 7.22% and a national average of 310. August rolls around and we hit another high of 7.48% for the national average on rates. And of course, the price index hitting 312. September comes and we are inching closer to 8%, with now the new national average, again for someone with good credit, at 7.6%, and a national home price index of 312,000. So as you can tell, a lot of volatility between interest rates and a consistent increase on home values that we saw in 2023. So then we roll into October, and then the system gets a shock all over again, because for the first time in 20 years, interest rates exceed 8%, reaching a high of 8.03%. And this freaked everybody out because especially first-time home buyers that are younger, they hadn't seen interest rates this high. And as we spoke about, the national price index kept rising. So in many local markets, now you have this shock factor of interest rates being here and home values being here. Now I will tell you, at the moment, the Federal Reserve of St. Louis has not released the national price index for the month of October or November, but we do have the information on what happened with rates further into November. So in November, rates had a change, and they actually started climbing back down to 7.55, and then they reached a new low of 7.125 as of the date of this recording. So needless to say, interest rates still higher, but improved. Happy to see that we went off of that 8% high, because that definitely freaked out a lot of people naturally. But at the same time, with interest rates being over 7% since July 2023 through current date, it's created a lot of opportunity, because now for a while you saw the ability to negotiate with sellers and builders come back, which is great, especially for those that are first-time home buyers that don't have a lot of cash available. This is a great time where you can go look at the $400,000 home and maybe see if they're willing to give you $5,000, $10,000, $15,000 towards your closing costs. And this is where we have a lot of fun, because now, based on what you can negotiate, we can use some of these funds to get below market rates to still provide you with affordable monthly payments. So having shared all of this, where are rates headed? Well, rates are expected to start heading down. The exact time we don't really know, but the most recent report is estimating that by the end of the first quarter of 2024. However, there's cause and effect. As interest rates start going down, then you're going to start seeing demand start going up. So the deals that you're able to negotiate now, like I mentioned, like seller credits, as rates head down, your ability to negotiate that type of deal starts going away as demand rises, because there are still a lot of people out there that do qualify but have become fearful of the market. So they're just waiting on the sidelines. But eventually they will come back. And when they do come back, then now you've got this other challenge, which is now I can get cheaper capital, meaning lower rates, lower payments, but now I have to be willing to pay more for the same home. So to give you an example, generally when interest rates drop, homes go up 5% per every 1% interest rate reduction. So if you've got the $500,000 home right now that you can buy and negotiate in order to try to get a seller credit to buy a lower interest rate, rates drop 3% in 2024. Should that happen, now you have to be willing to pay $75,000 more for that exact home. Cause and effect. Well, thanks for watching. Comment below. Let me know, what do you think? What's going to happen in 2024?